Hello, everyone. Welcome to Smart Investing. I'm Albert. I'm the owner of the channel for Smart Investing. So, today's video is video number 2 for the automobiles and trucks sector. Today, I have 4 stocks that we're going to go over. We're going to jump into the first one. Same way like we always do. We're going to start from the bottom, work our way to the top. So again, I'm gonna refresh these stocks and just do a little quick overview real quick. So ticker symbols and names. So the first one we're gonna go over is ticker symbol PEV, also known as Phoenix Motor Inc. Again, the name might be longer, but again, this is the name that I have here, as you can see. So the second one that we have will be ticker symbol HYLN, Hillian Holding Corporation. Next one will be ticker symbol GP, also known as Green Power Motor Company Inc. And the last one that we're going to go over is ticker symbol LOBO, Lobo EV Technologies. I'm Hispanic, so the word Lobo actually means wolf. So if you want to look at it that way, it could also mean Wolf Electric Vehicle Technologies. I'm sure that company is in some kind of Spanish region or Spanish speaking region. Might be in the Caribbean, Central America, or South America, some Latin American country, or maybe even in Spain. So we'll find out and then we'll go over these stocks. So first one up, like I said, ticker symbol PEV. You guys, if you see my previous videos, you know how I do my first page. So looking at this, do I like what I see just by looking at it? I'm reviewing all the numbers. Uh, Not really. I don't see anything worthwhile. Market cap is pretty low. Volume as well is too low. I'm not really seeing much. The price is like horrible. I mean, just because it's cheap doesn't mean it's gonna do good. I just don't see any good factors thus far. We're gonna move into the charting portion for this. Looking at the 5 year, you have a high back in 2022 of about six and change, about $6.38. Fast forward to the 1 year, you see these short bursts. I mean, you see it in September, then you see it in November, then you see it back in January. It didn't even okay for the first one. It broke through the high. That was the highest it's been, and then you see these another short burst. After the downtrend, you see another short burst, and you barely even reached the new high. Then a little drop, and then it tried to go back up, and then slowly downtrending. That looks more normalized. But this is scary. This is very scary to see. And for that to go on from September all the way to, let's say, about January. So we're talking about September, October, November, December. Let's say 4.5 months. That's pretty scary to see volatility jumping in and out like that. So looking at the chart, we see this movement at about 80 cents, and then anything above that is just pretty scary to see. Um, so we're looking at the next breakthrough. If I'm not gonna jump in this, but if I had to say, I would say about $1.80 and then that's it. Just to profit. I wouldn't even risk going above the dollar just to play it safe. So let's say 80 cents, you jump in. So we're only looking at a 20-cent profit. I mean, it's not even worth it. This stock wouldn't even if this stock had a lot of volume, a lot of movement, market cap was better, and the stock was still cheap, but just different factors playing into it to make it more active. This does not look good. Charting looks horrible. Uh, Basic info looks horrible. We'll look at some quants real quick. Um, Reviewing all that, I don't see nothing positive about it when it comes to quantitative. So I gotta say, 2 out of 3, 2 out of 3 is bad. And then we have the overall. Sorry, that's supposed to be an X. And then the overall rating. I wish I could rate it a 0. They rated it a 1. I guess I can agree with that. Now looking at the company for the financials. Again, by default, I already have 2 out of 3. And that already tells me that it's not a good company. Even the fundamentals, even if they are pretty decent, again, from the numbers and the default decision that I use, it's already telling me that it's not even worth it. Negative numbers, I mean, like, these numbers go on and on. Indicators is just showing me that it's not good. Debt is just horrible, over 100%. Uh, Definitely not sustainable. This stock is definitely going to get delisted pretty soon. I would stay away from this stock. I would not add it to the watch list. If you think you're gonna have a cheap stock and you're gonna make, I don't know, even 5 times your money at most, don't even buy into it. I don't see anything positive from this company. So my answer for this company is a definite no. So if you have this on your watch list, again, just went over this company. Do not add this to the watch list. Don't even think about adding it. Not even anytime soon at all. At all. No matter what anyone tells you. So let's just look at the profile real quick. I want to see just the name of the company and see where they do business and see what they're about. Just a little quick recap. See what they have so far. So they're doing business as a Phoenix Motor Cars, sorry, and an electrification solutions provider for the commercial vehicle industry. Okay. So manufactures, assembles, and integrates electric drive systems for EVs. So they work with EVs, basically. So basically, they sell EV cars, pretty much. So when it comes to EVs, there was a high anticipation for quality EVs, but it just hasn't been the case. And again, the electrical grid in the US, I don't know about other countries, I haven't done my research on that, which I could, but I'm always busy, and that's a lot of work on my hands. But to say that the electric vehicle solution is going to happen everywhere, I doubt it. Again, the electrical grid cannot support or sustain a bunch of EVs in so many major cities. So I know it pays to be bullish, but it's just not happening. They said, we're already in 2024. I mean, they were talking about this about 12, 13 years ago. Electric vehicles is the future. And then, what I'm saying is there's just not a lot of competition. So there's not a lot of EVs that you can buy aside from Tesla in the US. it's not really popular. Yeah, we have other American EVs, but it's just not a popular thing. It's not. It's not common. So we're still living on gas combustible vehicles, which I own myself. So it's the safest bet, huh? Next stock we have ticker symbol HYLN, Hyliion Holdings Corporations. Looking at the first page that we always look at, looking at the numbers. Seems pretty active. I don't like the price. Market cap could be better. Uh, we have here the 52-week high and low. I'm not fond of it. Earnings horrible. I don't see numbers that I like. I have nothing for the PE. So we're gonna look at the charting. Look at the 5 year real quick. Wow, 2020, obviously in 2021, that's all gone to shambles. And again, it's that fake market back in 2020, 2021. Looking back in the past year thus far, we're already pretty much halfway through the year. So we have like an average of about 1.2, and it's right at 1.5. So basically, if you got in for around 1.2, you're gonna make 30-cent profit, give or take. Not really worth it for me, just unless you're really gonna take that high risk. But I wouldn't suggest it. We're gonna have the financials. We're gonna look at that. Sorry, we're gonna look at the. It doesn't give me quant, so definitely not a good sign. Financials. Let's look at the general accounting practices. Whoa, that is not good. We have EPS from 2023. I mean, look at these jumps. Well, sorry. Look at those jumps with the actual result. This is all over the place. And again, main factor is that they're all negative. So we're going to look at the key indicators here. Looking at ROA, negative 33, negative. This is horrible. Horrible. This looks like another stock. That is pretty low, but again, it looks pretty horrible. This looks like a stock that is about to get delisted or on the verge of being delisted. Not much going on for them. So they do not pay dividends, which they shouldn't. Make no sense. So reading about this stock, they are a developer of sustaining electricity producing technology. They also provide distributing power generators that can operate on various fuel sources. It's a deployable generator that can offer also prime power, peak shaving, and renewables. So they're trying to offer the next generation of generators, if I'm understanding that correctly. That's what it looks like. They also want to get into the marine space. So yeah, they want to combine heat and power. So there you have it. Hyliion Holdings Corporation. So again, for this stock, do not add it to the watch list. We're going to move on to the next one. Next one is ticker symbol GP, Green Power Motor Corporation. Looking at the 5 year real quick. Open that up. Looking at the first page like we always do. Market cap 27 million. Does not look good. 52-week high and low. A low of 1, high of 6. It needs to break new highs. I mean, just that $1 is killing it, killing it. Makes the stock really, really look bad. Earnings are negative. PE, I have nothing for PE. These low prices are just, it looks awful, really. Uh, Three in a row already, the third stock. So far, the sector looks mixed. So far, these companies with the electrical, I can't say all, but so far from about the last 8 names, 7 names that I'm going over, it looks pretty mixed. Some of them are doing okay, and then some of them are just doing horrible. Like they just try to do the investment on the EV, and it just doesn't. Again, it's not a good investment. It doesn't seem to pay off. People keep trying. I mean, transportation definitely is important, but it doesn't seem like it's going anywhere, based on the numbers, and based on people purchasing these kind of vehicles. You know, I don't know the percentage, but let's say out of 10 people, I'd say almost 8 or 9 out of 10 times, if someone was going to purchase a car here in the US, they're going to choose a gas combustible related car, not an electric vehicle. If they do fuel flex, I'd say that leans more towards the EV because that's more of an upgraded system. So anyhow, with this stock, doesn't look good. 5 year, you see that pop obviously in 2020, 2021. The real economy's from 2022 onward. So we see that downtrend in 2023, and it went from about $5.50, and then lays it down with the downtrend, and it breaks down even more for this year in 2024. Excuse me. So we are now at about $1. So what does that tell you? Uh, Almost for the past year, getting there, it has been a bad investment. If this continues for at least another 6 months, uh, there's gonna be problems for it to get back up, and it needs to show signs of some positive earnings or something very major. But again, the stock does not look good. Moving on to the analysis for the quants. If it shows me anything, showing me nothing, not much at all. Overall rating, rated this a 1 out of 5. I can pretty much agree with that. I can confirm with that. Because again, not everything is as accurate as you may seem. That's pretty much it. Let's read about the company. Financials, we can go over them. Let's look at that. But I'm sure they're going to be negative because just looking at those numbers again, I mean, horrible. Net income negative. Volume for the company again. What was the volume? Yes, it was pretty low. Revenue, I mean, just awful numbers. Awful numbers. I don't like what I see. Uh, it does not look good. Moving on to the profile real quick. We just want to read what this company is about. Just to get an idea as to what is making money and what is not. So this company is based in Canada. It says it designs, builds, and distributes a full suite of high floor and low floor, all electric, medium, and heavy duty vehicles. So they're into like buses, school buses, shuttles, cargo vans, cabs, and chassis. Uh, Again, they're even distributing into South Cali. But with those numbers, it does not look good, and I can't say they need work to do because I just don't see this going anywhere. The numbers are not supporting it. Wall Street is not supporting it. Uh, the financials, anything else is not supporting it. So again, for the stock, do not add to the watch list. Do not add this. If you hear about it, run away. It's awful. So the last one that we have is ticker symbol LOBO. And this is going to be a stock that is worth 2.5. So basically $2 and change. Looking at the market cap, needs a lot of work. Volume looks horrible, but that can change from day to day. The range is horrible. I mean, we have here, 52-week high and low, not even worthy. This is pretty decent. At least they're in positive territory when it comes to their earnings. But I'm sure they're gonna need a lot of work. I'm glad that they actually came up with the numbers for their PE, but I would like to see forward PE. So even with that 20 PE, it's telling me it's slightly overvalued. And we're going to look into that a little bit more in a few minutes. Looking at the 5-year chart, we have here at around average is about, I don't know, 2.67. And the stock right now is at 2.51. So slightly below average for the past 5 years. Again, the stock actually released last year, so I have nothing for the 5-year. And we're gonna go to the page where we have quants. It's not showing me anything for quants. That is not a good sign. We're gonna look into the financials real quick. And okay, that's set up. Now, ROA, we have here 5.3. I'm glad they're showing me recent numbers, and these numbers are from 2023. Very low margins, and I think it froze maybe. I'm not getting. Just bear with me real quick. So again, we're gonna look at the numbers, and it's showing me, wow, 17.7 for ROE. Earnings are slightly positive, slightly positive. Net margins at 6%. The debt needs to go down a lot. Debt needs to go down a lot. It needs a lot of work. It needs a lot of work. Net income, about the same from 2022. I'm actually shocked. Actually shocked. About the same. It looks like they're trying to hold up their numbers. They're doing pretty decent at that. You can see in 2021 and 2022 were highs. I expected 2022 to be a little bit lower, but they actually did better just by default with how, supposedly the stock market economy was doing. And then for 2023, they slightly went down. I mean, their numbers dropped. As you can see, are about 15%. When your numbers are that low, your percentages are going to be that high. So losing 50%, 15%, I did not mean for you guys to understand 50. I'm saying 15. So that's a small chunk. I mean, to look at it as negative, getting into those double digits for negative territory. Their balance sheet, again, they need a lot of work. Let's look at the cash flow. It needs a lot of work. I mean, it looks really bad, but I mean, hopefully things change. I'm not defending it in any way. They just need a lot of work. They need a lot of work. So it is not telling me where they're distributing or any location for anything, nothing. Corporate or some kind of headquarters. I'm not seeing anything as for their whereabouts. So anyhow, Lobo EV Technologies, electric vehicles manufacturer and seller. They sell e-bicycles, e-mopeds, e-tricycles, and electric off-highway four-wheeled shuttles such as golf carts and mobility scooters. I can definitely see that happening because again, you do not need a lot of kilowatts to charge your bicycle or moped or whatever, and it's more sustainable. It's more sustainable. You're not draining that much energy to charge into it, and again, you're more mobile. Because in order to move that size and that weight, just the whole engineering, just thinking about the whole engineering part when it comes to a one passenger uh, vehicle or transportation, mode of transportation, you just don't need much. I've been on a bicycle with no motor and stuff. So um, when you look at it in a positive aspect as to, you know, having it as a lifestyle to exercise and work out your muscles and gain some muscles on your legs and just look at it as a positive reinforcement for a daily lifestyle, then it's totally different. So with the e-bikes, I could definitely see that happening into more mass production and having a good brand to represent that. When you want to get into these one passenger electric vehicles. So other than that, I have no location. That's pretty much it. So for this stock, needs a lot of work. So I'm gonna say no to this stock. Who knows if I'm wrong? But again, they have a lot of work to do. So that's all I have for you guys. Thank you guys for watching. We went over 4 companies. And again, I said no to all of them, no to the watch list. And that is all I have for you guys today. Thank you guys for watching, and I'll see you guys in the next one.